What can teenagers and young adults learn from Warren Buffett's journey?
I started buying stocks when I was 11. I've been reading every book in the library on it. I loved it. My dad, it was his business, and I'd get to go down to his office and I'd read the books down there, and I saved the money, and finally, by the time I was 11, I could buy a stock, and I could tell you at that time, I went to New York Stock Exchange when I was 9. My dad took us to New York, each kid to New York once, and he took me. I went to New York Stock Exchange, and I was in awe of it. I could tell you how the specialist system works and the odd lot arrangements, and I could tell you history of finance and all of these things. And then I got very interested in technical analysis and charted stocks, and then all kinds of crazy things, hours and hours and hours, and save money to buy other stocks, and tried shorting, and I just did everything. And then when I was either 19 or 20, and I can't remember exactly where I did it or something, I picked up a book someplace. It wasn't a textbook at school, but it was in Lincoln, Nebraska. And I looked at this book, and I saw one paragraph, and it told me I'd been doing everything wrong. I just had the whole approach wrong. I thought I was in the business of trying to pick stocks that would go up. And in one paragraph, I saw that was totally foolish, and I left. I brought something that it's really interesting. Let's put up. What do we call this chart? Here we are. Yeah. Let's put up illusion 1. Done. Yeah, there we have it. Now if you look at that, some people will see 2 faces. Some people will see a base. And some people will look a long time and only see 2 faces. But the mind flips from one side to another. And that's, there's some name for it that they call it ambiguous illusions or something of the sort. There's other things that talk about aha moments, or in the old comic strips with Popeye, he would have a little balloon over his head and the light bulb would go on. There's this point where all of a sudden you see something you haven't seen. Well, it took me, I had an illusion that I was looking at, we'll say in that one, 2 phases. Let's go to the one labeled 2. And if you're looking at it from one side, looks like a rabbit, and if you look the other way, it looks like you're looking at a duck. And the mind is a very funny place. And I think people call it an apperceptive mass, when you have all kinds of things going on in your mind. And they go on for years, and they sit there and get lost. And then all of a sudden, you see something different than what you were seeing before. Now, it took me in stocks, which I was intensely interested in. I had a decent IQ, and I was reading and thinking, and it was important to me to make some money on it. I had every motivation in the world. And then I read a chapter. I read a paragraph, actually, in chapter 8, I think it was, of The Intelligent Investor. And it told me that I wasn't looking at the duck, I was looking, now it was the rabbit, whatever it may be. And whether you call it a light bulb, whether you call it, a moment of truth, whatever it may be. And that happened to me in Lincoln. I mean, it changed my life. If I hadn't read that book, I don't know how long I would have gone on looking for head and shoulders formations and 200-day moving averages and the odd-lot ratios and a zillion things. And I love that kind of stuff. Except it was the wrong stuff I was looking at.
In the world of investing, success is often attributed to a combination of factors such as market knowledge, financial acumen, and analytical skills. However, the role of perspective, learning, and thinking differently cannot be underestimated. These qualities hold the key to unlocking unique investment opportunities and paving the way for young leaders to create their investment strategy. By embracing a mindset that challenges conventions and seeks unconventional wisdom, aspiring investors can navigate the complex financial landscape and achieve remarkable results. One of the essential ingredients for successful investing is the ability to cultivate a broad perspective. By embracing a wide range of viewpoints, young leaders can gain a deeper understanding of market dynamics and uncover hidden opportunities. This entails engaging with diverse sources of information, seeking out alternative viewpoints, and actively listening to different perspectives. By avoiding echo chambers and embracing a multidimensional worldview, investors can better assess risks and identify undervalued assets that others may overlook. Investing is an ever-evolving field, and the importance of continuous learning cannot be overstated. Aspiring investors must commit to a lifelong journey of acquiring knowledge, staying updated with market trends, and expanding their skill set. By voraciously reading books, attending seminars, participating in workshops, and engaging in intellectual discussions, young leaders can sharpen their investment acumen and gain a competitive edge. Learning from the successes and failures of seasoned investors, while remaining open to new ideas, is key to adaptability and staying ahead of the curve. Conventional wisdom often limits potential investment strategies. The most successful investors think outside the box and challenge established norms. By questioning assumptions and embracing a contrarian mindset, young leaders can identify opportunities where others see obstacles. This requires the courage to take calculated risks and deviate from the herd mentality. Thinking differently involves conducting thorough due diligence, analyzing data with an independent perspective, and having the conviction to act upon one's unique insights. In today's rapidly evolving investment landscape, technological advancements and disruptive innovations play a pivotal role. Young leaders must embrace these changes and harness the power of innovation to inform their investment decisions. This includes staying informed about emerging industries, such as artificial intelligence, renewable energy, and blockchain technology, and identifying potential investment opportunities within them. By adopting a forward-thinking approach and recognizing the potential of transformative technologies, young leaders can position themselves for long-term success. Investing is inherently associated with risks, and young leaders must be adept at managing and mitigating them. Building a diversified portfolio, conducting thorough risk assessments, and maintaining a long-term perspective are critical components of a successful investment strategy. Moreover, cultivating resilience is essential to navigate market downturns and overcome setbacks. Learning from failures, adapting strategies, and remaining disciplined in the face of adversity are qualities that separate exceptional investors from the rest. The role of perspective, learning, and thinking differently cannot be overstated when it comes to building a successful investment strategy. Young leaders who aspire to excel in the field of investing must embrace a mindset that challenges conventions and seeks unique opportunities. By broadening their perspectives, continuously learning, thinking outside the box, embracing innovation, and managing risk effectively, they can position themselves as exceptional investors. As they embark on their journey, these qualities will not only inspire but also equip them with the tools necessary to navigate the ever-changing financial landscape and achieve remarkable success.